Hello there. Welcome to Accounting Space. In this video, we want to look at the preparation of the current accounts. So I've got a question that we have here. That is question 2 on that question paper. And our question reads that the following balances appeared in the trial balance of Sonty and Sonny traders on 31 August 2019 after the trading profit and loss account has been compiled. The partners are L Sonty and T Sonny. So you're given a trial balance whereby you're given balances of capital, current, drawings, and then you're given loan to T Sonny, and then salary details, and then you've got net profit at the end. So on the next page, you see that you're given the partnership agreement, which is the partners agreement, which you need to go through before you start to answer the question. Then on the required part, we've got the first part, which is 2.1, which is saying statement of profit or loss and other comprehensive income. And then the second one is profit or loss appropriation account. And on the last part, we've got current account of both partners. So you see, you know that the figure that we get in 2.1 on the preparation of statement of profit and loss, we are going to take it, the final figure, and then we transfer it to the profit and loss appropriation account and see that the figure again that we finally find in the profit and loss appropriation, that is the share of profit or the share of loss, is also supposed to be transferred to the current account. So we are going to take the figures that we are going to put in the current account from the profit and loss appropriation account. So the profit and loss appropriation now is the one that we prepared in the previous video, and we have it here. This is the profit and loss appropriation that we prepared, and we are going to just take the proportion of the current year, which is the share of profit. Remember, when the debit side of the appropriation is got a lesser total, we are going to extend the balancing figure as a transfer to the current account as a share of profit. But if it was on the credit, it was going to be a share of loss. So on the first part, we are going to prepare current account of Sonty. So we are only concerned about the share of profit of Sonty, which is the first one. We are seeing that we are having the same amount, which means they share their profits equal. So we've got 233,465 that we are going to start with transferring to Sonty account. We are saying the figure that we are going to transfer there. We are going to say our appropriation. Our appropriation on the credit side, and then we say and we've got a figure of 233,465. So having done that, we also have opening balances that we have for the current. So if you come in the beginning of the question, you'll see that current account of Sonty has got an opening balance of 70,000, which is on the debit side. Remember, this represents the debit column, and this one represents the credit column. So 7,000 is on the debit, so it's going to be as balance BD in Sonty account on the debit side. So we come here, we go to this debit side, and we are going to say our balance BD. And we have our 70,000. And then from there, we can go to the partnership agreement and try to see what exactly do we have in terms of the elements of the partnership agreement that is going to guide us on the items that are going to post in the current. But basically, we know that what is on the debit side of the appropriation should go to the credit side of the current. So we are just going to pick each one. If you look at, first of all, we've got interest on capital. So we can just try to see which between the calculations is interest on capital for Sonty. But if you go to the partnership agreement, it's saying for interest on capital, it's saying interest on capital is calculated at 10% per annum. And then T-Sonny increased capital on 1/2/2019 by 50,000 rands. So this internal capital is going to affect T-Sonny. So in this case, we are only concerned about T-Sonny. So we're going to say 10% of the balance of T-Sonny's capital, which is around 90,000. So basically, we are saying 10%, which is 10 over 100, multiplied by 190,000. And obviously, the figure that we are going to get is going to be your 19,000. So we go there and put our 19,000 on the credit side as interest on capital. So we are here. We can go to the credit side. And we are saying interest on capital. Uh, 19,000. So this is what we have. And then we go on to see the next item that we have on the debit side of the profit loss appropriation. We have got now interest. We also have salary, which is supposed to come, but the salary that is supposed to come on the credit side of the current account is the salary that haven't been paid. So what we are going to do, you are going to see the salary of Sonty that we are given in partnership agreement. They're saying partner L Sonty receives a salary of 9,000 per month. So it means the salary per year is going to be 9,000 times 12. And obviously we calculate there, we see what we get, 9,000 times 12, we are going to get you 108,000. So here is 108,000. Then we compare it with the salary that was paid for Sonty, which we get at the beginning of the question, where they're saying salary L Sonty 90,000 is one that was paid. So we are going to calculate there and say 108 what is supposed to be paid, which is 108,000, and then we subtract what was paid, 90,000. And we get 80,000, which is not yet paid. So the proportion that is not yet paid is 80,000. The one that is supposed to go to the credit side uh, of the current account. So we are saying salary, and we are saying it's 18,000. So this is what we have, and then we go again to see what next we have on the debit side. So we now have salary, interest on capital, we've entered now interest on current. So we are seeing that for interest on current, we have for Sonny, which is supposed to come to the credit side, and then we don't have Sonny there. But Sonny, we are going to prepare it as the second current account, and we are just keeping it. And then we go to the next one, employees bonus fund, and we check which bonus was for that 4,000. If it's for Sonny, then we adjust for that. Then we see that what we have there. We see that in the issue of bonus, it's being said create an employment bonus fund of 4,000, which means it's not going to affect our current account. So we can just leave it and then let's look at the next one. The next one is we go to we have our proportions of the apportionment of the current, which we did just for that at the beginning of our current account. So we leave that one. We go to what is on the credit side. We've got this is the figure that was taken from the profit and loss and other comprehensive income. We leave it. Then we've got interest on drawings. We see that we've got two interest on drawings that there. We only want for Sonty, so we go there to the partnership agreement and see how did we calculate that one. Interest on drawings was calculated at 15% per annum, as if the drawings were for 3 months. 15%, then we say 3 over 12, because they are saying for 3 months. So we say 50%, which is obviously 0.15 as a decimal. So we are saying 15 over 100. We multiply by the figure for drawings for Sonty, which is 80,000. And then we multiply by 3 over 12. So let's try to calculate this as such. We are saying 15%, which is 0.15, you multiply by 80,000. And then you multiply by 3 over 12. And you are going to get your 3,000. So it means we have got 3,000. There is our interest on drawings. So interest on drawings is supposed to be on the debit side of the current. And we also take the whole figure for Sonty for drawings, 80,000 also. It should go to the debit side. So interest on drawings and the whole amount for drawings should also go to the current account, but they go to the debit side. So we go there. It adjusts them as such. We go to the debit side. We are saying interest on drawings. Interest on drawings. And then the amount that we have is 3,000. And then we are saying the whole drawings figure also should come here as 80,000 on the debit side. And then obviously we go again and check the appropriation, you see that there's interest on current for Sonty, it's 9,800. So it's also supposed to come to the debit side. Remember, we said what is on the credit side should appear on the debit side of the current. What is on the credit side of the profit and loss appropriation should go to the debit side of the current account. So 9,800 is for Sonty, for interest on current. So we are saying uh, interest on current, and we have 9,800. 9,800. But basically, the calculation of that 9,800 is being based on the partnership agreement again, is we are having interest on current is 14% per annum. So basically, we are saying 14% times the current figure, which is 70,000. And you are supposed to get your figure is interest on current is 9,800. So this is what we have. So having done that now, we can try to see if there's anything again that we still need to enter there. So you see that we've exhausted everything that we have in for the current account. So we can now balance the account. So basically, there we are going to put our double lines. So we have our double lines. Now, if we add the total of the debit and the credit, we are going to see that our credit is going to be the greater total, and we check with how much there. The total of the credit is 270,465, which is the greater total. 270,400, 465. So this is what we have. So if you subtract now 270,465 with all what we have on the debt side, you're going to get a balance of 170,665, which is now going to be your balance CD, which obviously will come here again as your balance BD on the opposite side below the double line, which is 107. This side, it will be now a balance BD. So we can just try to correct it here. Here's our balance BD. So we are having our balance BD. So this is 107,665. So this is what we have, guys, in terms of the preparation of the current account of Sonty. And we also have Sonny, which we are just going to prepare beneath this one. So this one is for Sonny now. We've already entered the appropriation 230,465, which is the figure that we are taking from the appropriation account, which is this one for Sonny, 230,465. And also check for the opening balances for the current for Sonny. Obviously, we have it here. Current account, you see that for Sonny, we have got a credit balance, 90,000 is the opening balance, which is going to be our balance BD. So we go to the credit side and indicate our balance BD. We are saying balance BD. And the figure that we have there is our balance BD. It's 90,000 for Sonny. Right. Having done that now, we can now go to the appropriation again and pick the figures that are affecting our Sonny. We go there. This is our appropriation. You can start with. So what is on the debit also should appear on the credit of the current. So here we are saying for interest on capital, we can go there again and try to see how can we calculate it. So we are seeing that interest on capital, we are told that interest on capital is calculated 10% per annum. T-Son increased the capital on 1 June 2019 by 50,000 rands. So 1 June, and the year is ending. The year is ending on end of August, 31 August. So you see that this capital was there for the whole of June, July, and August. So it was there for 3 months. So we are just going to say 10% of 50,000, which is 0.10 is a decimal, times 50,000. Then we get the annual capital, interest on capital, and then we multiply by 3/12, which is the proportional, to get the interest for 3 months. So we calculate it. You see that the amount that we are going to get is 1,250. So this one is for 50,000. So it's for 50,000, yes. And then this 50,000 is inside the capital that we are having here for Sonny, which is 250,000. So remember, this was at the end when this 50,000 was already adjusted. So we have to remove it so that we are left with capital that was there for the whole year by saying 250,000 minus 50,000. And we are getting to 200,000. So for the capital that was there for the whole year, we're going to multiply by 200,000. So we're going to say, and now our 10% of 200,000. So I'm just saying 10% of 200,000. And then you are going to get your 20,000. So if you add 20,000 plus 1,250, you're going to get 21,250, which is exactly what we are having in our appropriation here, which is 20,000 plus 1,250, which is for Sonny. And you get 21,000, we get your 21,250 as interest on capital on the credit side again. We come here, we are saying interest on capital. For interest on capital, we are having 21,250. Then we go and check again what's the next item in the appropriation that we have on the next item that we have is salary. In salary, we also have a salary that we need to adjust. That is on the debit side of appropriation, which is this one. And we check for Sonny, what's the salary? For Sonny, we are told that on salary, Sonny receives 120,000 per annum, but this is the expected salary, and we check what was paid and see what was not paid. So what was paid is for Sonny, it was paid 90,000. So what are we going to say? We say 120,000 minus 90,000. So we are now saying to get what was not paid, we're saying what was supposed to be paid is 120,000 and what was paid is 90,000. And the salary that you are going to get there, you're going to get 10,000 not yet paid. So this is the amount that is supposed to go to the current account. It goes on the credit side of the current. And we are saying salary 10,000. So this is what we have, and then we can check again appropriation. What's the next item that we are using on the debit side? In the appropriation, we have got our interest on salary, we've entered it, interest on capital, we've entered it. Now we've got interest on current, which is for Sonny 12,600. So we can just take it. It's already calculated. Remember, we're saying 10%. So we're saying interest on current. And we are saying the amount that is there for interest on current is 12,600. 12,600. And then from there, we check again. Remember, we also have the issue of loan. You can just maybe try to see if we can go back again and try to see what we have. We also have the issue of our loan. Remember, employers are bonus funds. We are saying we are able to adjust it in the current, but we have the issue of, and this becomes the last one that we have on the debit side, the share of profit, we have already entered it. And then we check the issue of loan, and it reads interest on loan by T Sonny must be calculated as no interest was calculated for this period. So interest on loan, obviously, we're going to calculate it for the year. So we are saying so interest on loan, we have loan here, which is saying loan T Sonny 8% per annum, which is 19,000. So we say 8% of 19,000. Let's calculate it and see what we get there. In other words, we are just saying 0.088% is a decimal. And then you multiply by 19,000. And then you are going to get your answer is 1,520. So this is the loan, interest on loan, and it's for T Sonny, which is a current that we are prepared. It's supposed to go to the credit side of the current account. So we go there. It's 1,520. So we are saying interest on loan 1,520. So this is the figure that we have. So having done that, now we also have entries that is supposed to go to the debit. We can go to the credit side. We can now go to the credit side of appropriation and check which figures are there. Remember, we have our drawings, interest on drawings. So we can check for interest on drawings again and check which one we taking between the two. So we go there. On partnership agreement saying interest on drawing must be calculated 50% per annum, as if the drawings were for 3 months. So we are going to say 50%, then we get the annum figure, then we multiply by 3 months over 4, get the proportion for those 3 months. So we are saying 15%, which is a 0.15 as a decimal, you multiply by drawings figure for Sonny, so 120,000. Multiply by 3 over 12, get the proportion for 3 months. So we are going to see that the figure for interest on drawings is going to be 4,500. Get your 4,500. And also, on the debit side of the current, you're also supposed to put the whole amount of the drawings for Sonny, which is 120,000. So we're going to put 120,000 and 4,500. So we go there and adjust for that. So we are here, we are saying interest on drawings. And the figure that we got is 4,500. And also you put the whole drawings figure, which is going to be 120,000. And then this is what we have. So we've finished all the entries that are supposed to be there. So we can now balance our account. We add the debit, we add the credit. We see which total is greater. But we're going to see that the credit side is going to be your greater total. So we can put our double lines. So we have our double lines. So in between double lines, we are saying the greater total is going to be the credit side with 388,835. 388,000. 388,835. It is going to come both sides. And then the debit side is the smaller total where we have the balance figure, which is going to be our balance CD. So if you say 388,835 minus 103,000 minus 4,500, the answer that you're supposed to get here is going to be 264,335. So This balance CD also should come on the opposite side as our balance BD. Below the double lines. So we are saying here we're supposed to have our balance BD with the same amount, which is 264,335. So this marks the end of our preparation of the current accounts according to the question that we have. And this question is on the question paper of June 2022. So let's say for more videos to come, typical examination questions are going to come as we prepare for exam. Let's subscribe and share. Let's share the link to our colleagues who are doing financial accounting. And 5, let's turn on the notification button so that when we upload new videos, you get notified. Thank you for listening. As for this video, I'm signing out, but let's meet again in the next video.